The S&P 500 moved as we were expecting and anticipating in the previous week. However, the bullish trend of the S&P 500 is still as it was in the previous week. But because of some change on the daily charts, the S&P 500 is now in the limited bullish condition. And this is because on Monday 8th of June, the S&P 500 indicated that there will be more fall in the coming days. However, the S&P 500 managed to sustain and close above the 7,400 on Monday on 8th of June. But because the S&P 500 lost the 7,400 forex strong support level, and then there were continuous hourly closings below the 7,400 forex level, this is why it was clear that now the S&P 500 is going to fall. Furthermore, on the same day, in this, the final update, I mentioned that if the S&P 500 closes below 742x level, in that case, it will be a bearish condition and will allow a gap down open the next day, or irrespective of any open, an initial or intraday bearish movement, and then there will be more fall. And then these two candles combined forced the S&P 500 to give up a lot, and there was a very heavy fall, and the S&P 500 made an intra-week low at 7,237.85. Then because of this combination, it was clear that S&P 500 is bullish, but is limited bullish, and is now coming out of the saturation and the overbought conditions. And the saturation and the overbought conditions were demanding a fall, a cool down. This is why through the weekly chart, S&P 500 is in the long-term bullish trend. Through the daily charts, the S&P 500 is still bullish but is limited bullish. And now if you are thinking that the 7,100 range is now out of the picture, then no, it is not out of the picture. It is just like the limited bullish or the conditional bullish. The 7,100 is still conditional bearish and is still in the picture, provided that the S&P 500 loses the strong support levels, especially on Monday and Tuesday. Otherwise, there will not be any 7,100 or 7,200. The maximum fall will be limited to the 7,300 range, and there will be good chances that the S&P 500 will move to the 7,500 range. But the 7,500 range will not happen. There will not be any chances until and unless the S&P 500 fulfills the conditions that were seen on Friday 12th of June, when the S&P 500 moved up and made an intraday high at 7,456, but failed to close above the 7,400 forex, and all hourly closings were below 7,400 forex level. And if you notice here, I've repeatedly mentioned 7,400 forex. Without the 7,400 forex, there will not be any bullish movement. Rather, there will be very good chances that there will be a U-turn, and then there will be the fall. So now on Monday, on 15th of June, the 7,400 forex level will tell us whether S&P 500 is going bullish towards 7,500 range or not. And how we will see whether it is going bullish or bearish, what will happen in the bull side, what numbers will be in the bull side, what support levels are in the bearish side. All of this, the movement, the levels, the numbers, I am going to discuss in detail in this S&P 500 weekly technical analysis, which is for the week of June 15th, means from June 15th, which is Monday, to June 19th, that will be Friday. Now guys, let me tell you that I have divided this S&P 500 weekly technical analysis in two parts. The first part is the technical part. In the technical part, I will show you the weekly and the daily chart and the technicals, whether there is still the saturation or the overbought conditions, or if the oversold conditions. Okay, so through the technicals, we will see why the S&P 500 is still in the long-term bullish trend, but in the short term, there is some problem. Second part is the probable movement. In the probable movement section, I will tell you what we are expecting to happen in the S&P 500. Just like previous week, we knew that there will be more fall, then it will sustain, hold in the 7,200, then there will be the reversal, then there will be the fall. Similarly, what will happen on Monday, Tuesday, Wednesday, etc., whether there will be the first bullish movement and the fall, or whether there will be the fall and then the resumption of the bullish movement. All of that in the probable movement section. And guys, it is highly recommended that you should watch both of these sections in order to understand what is going to happen in the S&P 500 and Dow Jones, and in a manner to the entire US stock market in the coming week. So guys, first I am going to start with the technical part. So guys, now I am going to discuss the technical part. This is the first section of the agenda. In the technical part, I have divided it into the weekly and the daily chart. Weekly chart means the long-term picture for a month, for a quarter or so. Daily chart means the short-term picture, for 2 days, 5 days, or maximum for a week. So first I'm going to cover the weekly chart. Now weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. Now let's first discuss the candle. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So now this is the last weekly candle. It's a bullish candle in nature. Why a bullish candle in nature? If you notice, in the entire week, the S&P 500 from top to bottom, there was approx 3.25% movement. Secondly, the closing and the open and the closing of the candle of this the weekly candle are above the 50% of the candle itself. Okay, all of this is indicating bullishness and the bullish movement, right? The only bearish factor is the shape of the candle, because the shape of the candle is indicating, it is not indicating a gap down open or an immediate fall. It is indicating continuation of the fall. What? It is indicating continuation of the fall. Now, this must happen by or before Wednesday, because if it does not happen by or before Wednesday, in that case, this will trigger bullishness. In that case, there will be some chances that the S&P 500 may even form a new all-time high in the 7,600 range. So this means that this candle indicates an initial or intraday bullish movement on Monday, but not a gap up and not a gap down. Okay. Now, this is the Dow Jones. This is the last weekly candle of the Dow Jones. If you notice, it's a good or a very heavy bullish candle. Why? Notice this, the long tail of the candle. Okay, it is indicating again bullishness or good bullishness. Yes, this candle is indicating a gap up open on Monday, or irrespective of any open and initial or intraday bullish movement on Monday. This is the weekly candle and is also indicating continuation of the bullish movement in the Dow Jones. And if the bullish movement continues in the Dow Jones, in that case, this will continue in the entire US stock market, including the S&P 500 and the Nasdaq. So now overall, the picture is that on Monday, there will be an initial or intraday bullish movement. Now let's get a more clear idea through the technicals whether the bullish movement will be sustainable or not. If it will be sustainable, then how far it can go. In terms of the technicals, S&P 500 is bullish through the moving averages, Bollinger Bands and the Ichimoku cloud on the weekly chart. S&P 500 is bullish through the MACD on the weekly chart. S&P 500 is bearish through the stochastic RSI on the weekly chart. And the S&P 500 is very near to the saturation, to the overbought condition, to the heavy divergence. This means that if the next week there comes a green candle, a good green candle, in that case we can see that S&P 500 has again hit the saturation and the overbought conditions. This also means that the heavy bullish movement in the next week will not be sustainable, and in this manner we might not see, or there will not be good chances for the new all-time high in the S&P 500, means a movement in the 7,600, because as soon as it starts to move up, there comes 1% bullish movement and S&P 500, or simply S&P 500 enters into the 7,500, it is expected to hit the saturation, the overbought conditions, and the heavy divergence. Okay. So all of this indicates that the S&P 500, yes, indeed, on the weekly chart, on the long-term charts, the S&P 500 is 100% up, sorry, not 100%. The S&P 500 is 90% bullish, means the long-term trend is still bullish. There is no change in the long-term trend. There is some weakness through the stochastic RSI. Otherwise, it is strongly bullish. Okay, but yes, any more bullish movement, a good bullish movement will trigger the heavy saturation and this heavy problem, and the heavy overbought conditions and heavy divergence and the problem. Now comes the Dow Jones. In case of the Dow Jones, almost the same. Dow Jones is also bullish through the Ichimoku cloud, Bollinger Bands and the moving averages on the weekly chart. And the Dow Jones is, well, Dow Jones is bullish through the MACD and is also bullish through the stochastic RSI on the weekly chart. So Dow Jones is 100% absolute bullish, means the long-term trend is absolute bullish in the or through the Dow Jones, but at the same time Dow Jones is still trading in the overbought condition, and any more bullish movement in the Dow Jones is expected to hit the saturation and the heavy divergence. Now in the previous week, so okay, before that, both the S&P 500 and Dow Jones are 100 means S&P 500 is 90% bullish, Dow Jones is 100% bullish, and both of these are indicating the long-term trend is absolute bullish, heavily bullish. The long-term trend means for a month, for a quarter or so, the long-term trend. Now in the previous weekly technical analysis, I mentioned that because of the heavy the overbought condition, the Dow Jones will give, or most likely, highly likely, it will give a red weekly candle. And if you notice, until Friday, in the first half, the Dow Jones, it means even though there was very heavy bullish retrace after this comments, the post from the president on Thursday that that he is holding the strikes and now there will be some deal, etc., etc. Okay, because of this, the entire US stock market sharply and heavily moved up intraday on Thursday. And because of that pressure, the Dow Jones was about to give a red candle, but then in the second half on Friday, when the weekly candle was forming, there was a little bullish movement and the Dow Jones did not give the red candle, rather a green candle. This is why the Dow Jones is still in the overbought condition and is still susceptible to give a red candle in the next week. But that will now, whether there will be a red candle or not, the weekly red candle or not in the next week in the Dow Jones, it will now be derived or will be defined by the S&P 500. So this was the big picture, means the long-term picture. Now let's move on to the daily chart to see the short-term picture, means for 2 days, 5 days, for a week. For this, the week of 15th of June, what the technicals are saying, if the technicals are supporting any bullish movement or still the fall, etc. So that will be more clear on the daily chart, the short-term picture. So let's move on to the daily chart. So guys, now we are here and this is the daily chart. Daily chart means one candle represents 1 day, not 1 week or 1 hour. One candle means 1 day. Now let's first discuss the candle. So if you notice, it's a bullish candle, normal bullish candle. Okay, but the closing of the candle was below the 7404x level, very strong resistance level. Other than that, the closing of the candle is below the moving average. This means that this condition is a bullish condition, but it's not the heavy bullish condition. This condition allows the SP 500 to get an initial or intraday bullish movement on Monday, but a gap up open is not confirmed. Furthermore, this condition will keep the pressure on the S&P, the pressure on the 7400 unless the SP 500 starts to give continuous hourly closings above the 7400. This means that there will be an initial or intraday bullish movement on Monday, and there will be pressure on the 7400, and the S&P 500 must recover, must sustain above, or must open above and then sustain above, and all hourly closings must be above the 7404x level, so that we can say that now S&P 500 is safe and is heavily bullish. Now in case of the Dow Jones, if you notice, it's a normal bullish candle. Okay, but this candle formed after this, the previous candle, which was in the open equal to low condition, and this candle is clearly above all of the moving averages. So this candle is also indicating an initial or intraday bullish movement, but is not indicating a gap up open, just an initial or intraday bullish movement. Okay, the only difference here in case of the Dow Jones and the S&P 500, that the candle of the S&P 500 closed below the moving averages, whereas the candle of the Dow Jones closed above the moving averages. So the Dow Jones is more bullish as compared to the S&P 500. Now it will be more clear through the technicals, okay, how much bullish the Dow Jones is, okay, or if the S&P 500 is more bullish as compared to the Dow Jones. So well, in terms of the technicals, if you notice, the S&P 500 is still neutral through the moving averages, but is bullish through the Bollinger Bands and the Ichimoku cloud on the daily chart. And the S&P 500 is bearish through the MACD. Okay, this is the big change. It is bearish through the MACD on the daily chart, and the S&P 500 is bullish through the stochastic RSI on the daily chart. Now, earlier the S&P 500 was coming into the oversold condition. This was supposed to happen on Thursday 11th of June. Otherwise, on Friday 12th of June, if there would have been the red candle, then S&P 500 would have hit the oversold condition and the saturation in the bearish side. This would then trigger a technical bullish movement, a technical heavy bullish movement. But because of the comments from the president, the post from the president on Thursday, okay, about the the war, okay, no more strikes, etc., and the deal will be signed for the, and this is something that he has said for the 39th time, okay, in last 3 months. Anyways, this has pushed the S&P 500 sharply up and all of the stock market up. Because of that, the oversold condition or the saturation in the bearish side is not there and is not going to happen anytime soon, even if there comes back-to-back fall. Okay, in this manner the S&P 500 will be considered as only 60% bullish or neutral but bullish. Okay, it is holding bullish. So there is this the margin, this is the bearish side, this is the bullish side. S&P 500 is just above this the margin line, okay, in the bull side. Now Dow Jones, well, Dow Jones is good. Dow Jones is bullish through the Bollinger Bands, through the moving averages, through the Ichimoku cloud on the daily chart, and the Dow Jones is bearish through the MACD but is bullish through the stochastic RSI on the weekly chart. No saturation, no oversold, nothing like that. So in this manner, the Dow Jones is more bullish. The Dow Jones is 90% bullish on the daily chart. And what we have seen on the weekly chart, the Dow Jones was 100% bullish. This means that the long term and the short term trends are still absolute bullish through the Dow Jones and in the Dow Jones. And because Dow Jones is the prime index to the US stock market, this means that all other indices, including the S&P 500 and the Nasdaq, are or will also be considered as bullish even when the S&P 500 is marginally bullish. Okay, but because of the Dow Jones, it will be considered as bullish, right? Clear? Now, even when everything looks good and everything looks bullish, there is just one problem. The first problem is this, the moving average itself. Then comes the 7,404x level. And the other big problem is the MACD of the S&P 500. And also the MACD of the Dow Jones, because the MACD of the S&P 500, Dow Jones and also the Nasdaq on the daily charts is trading bearish. In case of the S&P 500, there was the bearish slip in the MACD that triggered the heavy fall. Okay, this means that as long as the MACD of the S&P 500 is trading bearish, there will be some chances, okay, or there will be some fear of a sudden fall. This means that whenever there will be some confusion in the bullish movement, like it is that the S&P 500 is moving up or is trying to move up, but there is some confusion, in that case there will be the sudden fall. Why? Because of the MACD itself. But now the good thing is that because the MACD is there is heavy divergence, okay, in the MACD, this means that we can anticipate one more bullish candle on Monday or one or two more bullish candles on Monday, okay, before we see more fall. However, if there comes more fall now, then also the MACD will not give heavy divergence. Then also the MACD will try to converge, because the calculation of the MACD are complex and are different, and this does not mean that if there comes red candle then MACD will give heavy divergence. No, in that case also it will converge. Okay, so it doesn't matter whether there will be the red candle or the green candle, MACD is going to converge. This means that if there comes more fall, but this more fall will be or should be limited to Monday or maximum to Tuesday, not more than that, because in that case what will happen, if there comes back to back two red candles, then the MACD will open more, there will be more divergence in the MACD, and that will be the problem, because in that case there will be a technical reversal, technical bullish movement and the technical reversal. Okay, because in that case it will push the S&P 500 into the saturation and in the oversold condition. But guys, let me tell you that no matter what is going to happen, the bullish, the bearish movement, sharp up or down movement, I will keep you posted, I will keep you updated through these daily precise updates which I give to my Patreon community members every day from Monday through Friday. And also I give the opportunities in the premium stocks of the US stock market, and also the midweek update, and it's a video technical analysis generally given every Wednesday or Thursday. And guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And through this subscribe button, you can subscribe to any of these 3 levels or any of these 3 tiers. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates every day from Monday through Friday, as well as opportunities in the premium stocks and the midweek update video technical analysis. So guys, once again, the link to join my Patreon community is in the description of the video and also in the comment section. Now guys, I am going to discuss the second part of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement. Probable movement means what is going to happen in the S&P 500 in the next week, the week of June 15th. Means from June 15th, which is Monday, to June 19th, that will be Friday. Okay, and also in the Dow Jones and in a manner to the entire US stock market, the bullish movement, the bearish movement, the resistance and the support levels, etc. So now, the first thing first, the most important part, that is the most important thing that is going to happen in the next week. This is the FOMC event, and on Wednesday, on 17th of June, the FOMC event, the FOMC decision and the SEPs, the projections will be released at 2 p.m. Eastern time, and then at 2:30 p.m. the press conference of the Fed chairman. Now, the most important part here is the press conference of the Fed chairman at 2:30 p.m. Eastern time, because this will be the first press conference of the new Fed chairman. Now, the stock market, the Wall Street and the global stock markets, the global central banks, they will be looking into what he says and what will be his policies in the coming terms. Secondly, because the SEPs, the projections will be released, okay, by 2 p.m. Eastern time, before the press conference, so there will be some clear idea, good idea, okay, that whether the means what the Feds are thinking about the inflation, about the GDP, about the jobs, okay, about job openings, etc. And then the press conference. So there will be very heavy volatility on 17th of June because of this FOMC event. Now, in terms of the numbers, the movement, the bullish and the bearish movement, it is clear. 7,404x is the bullish side barrier. It's a very strong resistance level. Okay. Now, because the S&P 500 on Friday moved up and then struggled and then failed to close above the 7,404x, rather all hourly closings were below the 7,404x. This means that by default there is the pressure on the S&P 500. This is why I mentioned that this closing is bullish but not heavy bullish, and this puts or this keeps the pressure on the 7,400 psychological mark. What? The closing between the 7,404x and the 7,400 means the current closing that was at 7,431.45. Okay, so the open and the first hourly closing on Monday will be very crucial, will be very important, because if the open is above the 7,404x and also the first hourly closing is above the 7,404x, well, in that case, yes, now there are very good chances that S&P 500 is going to sustain and remain bullish on Monday and on Tuesday. Okay, in this the condition or by the FOMC, okay, or by the time the FOMC decision is released, means it will remain and sustain above the 7,404x, and also there will be very heavy chances that S&P 500 will move into the 7,500 range, right? This means that only when there comes the continuous hourly closings above the 7,404x, irrespective of the open price, okay, only when there comes the continuous hourly closings above the 7,404x, the S&P 500 will be ready, will be eligible for the 7,500 range. The only breaker here, or the only resistance, important resistance, is the 747x in between these two. Otherwise, after clearing 7,404x, S&P 500 is ready for the 7,500 range. Okay, now if you are thinking that I am emphasizing on the 7,404x level only because of this the Friday, then no. The same was seen on this day, Tuesday 9th of June. The same was seen on Monday 8th of June. The same was seen on Friday, 5th of June. The 7,404x. All of these three closings were below the 7,404x. This is why even in this update on Monday, I mentioned that as long as the S&P 500 is sustaining and giving closings above the 7,404x level, okay, it will remain safe. But if there comes the hourly closings, continuous hourly closings below 7,404x level, then SP 500 is not safe and it will come down, it will trigger the fall. And then exactly the same was on Tuesday, that because S&P 500 failed to hold and the first hourly and the continuous hourly closings were below 7,404x. This means the continuation of the fall, the bearish movement. This is the reason why I am so much emphasizing on the 7,404x level. Okay, this is very, very important. And yes, the same will work when there will be the fall. Means let's say that S&P 500 regains the 7,404x level on Monday. Okay, all hourly closings are above the 7,404x level on Monday. Fine. Now it is heading to the 7,500. S&P 500 has entered into the 7,500. There is very heavy resistance at 752x. Okay, this is the level, very heavy resistance. S&P 500, even if it moves up because of the news that there is the deal between the US and Iran, then also the FOMC event is there and Wall Street is now looking for, okay, this is the FOMC event. Then also this bullish movement will find very heavy struggle at the 752x. Then comes the 756x. This is again very, very heavy level, okay, much heavier as compared to the 752x. Then it will stuck, means the S&P 500 will move up, it is allowed to move up, but will stuck, okay, in the bull side, and is not expected to recover or to reach to the all-time high level before the FOMC event. It needs the FOMC events, the support from the new Fed chairman, okay, some kind of, whether there will be means like rate cut. For now, there is no rate cut this year, but if the Feds include at least one rate cut, then again that will be a bullish sign, okay, to the Wall Street. So then it will be looking for, means if there comes positive news, positive sentiments from the new Fed chairman, okay, on Wednesday, in that case there will be the bullish movement, and then the S&P 500 will be in a condition to breach the current all-time high, which is 7620.90, and will move deep into the 7,600 range with some possibility of the 7,700 range in the coming weeks, means by the next week or next to next week. Okay, there will be some possibility if all goes well. But here, okay, even this is the bullish movement. Now, non-technically the bullish movement is allowed, okay, it can move up, so and so, fine. But again, the same problem. If you look into the weekly chart I have shown you for the Dow Jones, also on the weekly chart I have shown you, okay, the same problem. On the weekly chart of the Dow Jones, I have shown you that the Dow Jones is still trading in the overbought condition. This means that if Dow Jones moves up continuously, okay, it keeps on moving up, then again it will hit the absolute overbought condition, and in that case again the fall. This means that for now the S&P 500 is allowed to enter into the 7,500, okay, but a movement to or beyond the current all-time high in the 7,600 is or will remain dicey, will remain heavily conditional. Okay, not because of the S&P 500 itself, okay, but because of the Dow Jones. S&P 500 on the weekly chart will also hit the saturation and the heavy divergence and the overbought condition when it enters into the 7,500 range. But before that, the Dow Jones will hit the overbought condition. Okay, clear now. So this is in the bearish side. Now this is the bull side. Now comes the bearish side. Okay, but guys, yes, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And guys, so far if you have liked this video, then please hit like to appreciate, and your appreciation matters a lot. And if you want to get these daily precise updates of the S&P 500 every day from Monday through Friday, and also the opportunities in the premium stocks, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now the bearish side, the bearish condition. Okay, yes, there is one more thing before, means this is in the bull side. In the bull side, This was the earlier the all-time high at 751712, 7517.12. Okay, and this was around my very heavy resistance level. Okay, that time. Now, for the chances of the new all-time high to happen or to be seen, when the S&P 500 moves up, then it must give continuous daily closings, hourly closings, 4-hourly closings, and the daily closings above the previous all-time high, which is at 7517. Okay, then immediately comes my 752x level. Okay, then above this, so there must come continuous hourly closings and daily closings above this, so that the S&P 500 can easily move to the 756x level and then to enter into the 7600. So based on the daily closings above these, the critical numbers, the levels, okay, we will see whether there are chances for the 7600 or not. And if there are chances in the 7600, then how deep it can enter into the 7600, okay, when it forms the new all-time high. Now, the bearish side. The bearish side, again, the same condition will be applicable. Let's say S&P 500 moves up. It has given continuous hourly closings above the 7404x range, daily closings above the 7404x range, but has failed to give the continuous hourly closings and the daily closings above the high of this candle, which is 7517.12. In that case, it will fall back. It will fall back to the 7404x range, and when it comes down to the 7404x, then it will hold. Okay, in this manner, the S&P 500 will then trade in between 7404x level and the 7517.12. And the bullish and the bearish movement will happen when there comes continuous hourly closings below the 7404x, so that the bearish movement can happen. And when there comes continuous hourly and the daily closings above the 7517.12, then the bullish movement can happen. Okay, this is how the small or well, not a small but 1% range, okay, will work for the bulls and the bears. Now, for the bears, by default the S&P 500 is trading under pressure. It is already under pressure. Okay, why? Because it failed to clear and sustain and give closing above the 7404x level. This means that if on Monday the S&P 500 remains below 7404x, all hourly, 4-hourly and daily closings are below 7404x level, in that case it will remain bearish. Well, I will say not bearish, but will remain under pressure. It will remain under pressure, and continuous hourly closings below the 7404x means S&P 500 will lose the 7400. It will not be able to sustain and hold at the 7400 for more than 2 to 3 hours. It will not be able to hold. It will have to lose the 7400. Now, when it comes down from the 7400, then it will hold at the 736x level. This is very heavy support level. And guys, if you notice, on Friday, on 12th of June, the low was 7363. Okay, this was in the 736x, but this is not my level. This was around my level. And in my pre-market analysis and in my first update, okay, again and again, I have mentioned the 736x because the S&P 500 sustained. See, in my pre-market analysis on Friday also I mentioned that when S&P 500 comes down, it will hold and sustain at the 736x and will remain in a condition to retrace and to recover the 7400. And exactly the same was seen on Friday. The S&P 500 came down. However, the low was the 7363. Okay, around my level. Okay, but it was not my level. Okay, so it was around my level. Then it retraced back and recovered the 7400 on Friday. This is why I am saying that when the S&P 500 loses the gives continuous hourly closings below the 7404x, means now it is going to lose the 7400. Okay, when it loses the 7400, then the 736x level will be able to hold the fall at least for 1 to 2 hours. Now, why I am saying 1 to 2 hours? Why I am not saying absolutely? The reason is that as of now, the S&P 500 has turned bullish. Okay, it is more likely to remain and to trade bullish, okay, as compared to the bearish side. This means that when it is already bullish, but if it comes down, okay, This means that there is very heavy pressure, but even in that in that heavy pressure, the 736X will be able to hold the fall, okay, at least for 1 to 2 hours, either absolutely for the entire day or at least for 1 to 2 hours if there is very heavy bearish movement or momentum, okay, maybe some news or something, okay, then this will be there. After the 736X, there comes the 732X level. This 732X level is very heavy support level. Earlier the S&P 500 has sustained heavily at the 732X level, retraced, okay, and has retraced by like 2% or more. So 732X level is very, very important here. This means that when the S&P 500 loses the 7,000 or trade continuously below the 7,404X level, okay, then 7,306X, okay, will be highly likely or kind of inevitable, okay. Then the 732X level, okay. Now 732X level is the last support level, because as long as the S&P 500 is holding and trading above the 732X level, it will remain in a condition to recover, to move back to recover the 7,400 and then to try for 7,404X and then to the 7,500. But once the 7,302X level is lost, then it will re-enter into the 7,200 range, okay. In the 7,200, the 7,206X level is there, okay. And if you notice, yes, there was some day when it came down and hold in the 7,206X. Well, this was Wednesday, 10th of June, when S&P 500 came down, okay. It hold at the, sorry, not hold, but the low, the closing price was 7,267, but this is not my level. My level is in the 726X. So this was maximum. It was supposed to happen with some chances of the 722X level, okay. This is the chain of the levels, the support levels, the heavy support levels and the medium, these support levels, okay, that can hold for 1 to 2 hours. Otherwise the heavy support levels will hold absolutely. Now what happens if there comes like, very heavy fall, maybe because of the press conference of the new Fed chairman, or maybe because of the news or so, okay, what will happen then? But before that, the S&P 500 must remain bearish. It should not be like that the S&P 500 on Monday and Tuesday and first half on Wednesday it is trading heavily bullish, and now comes the negative comments of the new Fed chairman, it comes down. In that case, whenever it comes down, it will remain up to the 7,200 range. It is not going to lose the 7,200 range, okay. What I'm saying is that if the S&P 500 is trading below the 7,300 psychological mark, simple. If it is trading below the 7,300 psychological mark by or before Wednesday 15th of June, by or before Wednesday 15th of June, in that case S&P 500 will be heavily susceptible to come down to the 7,100 range, okay. From the 7,100 to the 7,150, very heavy support to the S&P 500, okay. And no matter what, S&P 500 will hold. The fall will be stopped here, okay, at this zone, because for now S&P 500 is not expected to lose the 7,000 psychological mark. It needs strong reasons, very, very strong reasons to lose the 7,000 psychological mark, okay. Otherwise it will not lose the 7,000 psychological mark. Very, very simple. But at the same time, it is not just about the S&P 500. It is also about the Dow Jones, okay. Because see, if you notice on this day, on Wednesday, 10th of June, the Dow Jones came down and closed below the 50,000 psychological mark at 49,918, 49,918.79 or 49,919. Simple, okay, round up, just simple, 49,919 on Wednesday, 10th of June, okay. Now, as such, because it lost the 50,000 psychological mark, the Dow Jones, it was supposed to trigger very heavy fall the next day, okay. That fall was there in case of the S&P 500 initially, but because the Goldman Sachs was involved on this day, and Goldman Sachs moved up sharply, then the Microsoft, okay, then the CAT, okay, these one, but But everything was because of the Goldman Sachs, as if the Goldman Sachs knew that the president is going to president is going to post, okay, and his post will be positive. This post I'm talking about. This is why, once again, the 50,000 psychological mark in the Dow Jones is a must. Means only when there comes the 50,000, the closing of the Dow Jones below the 50,000 psychological mark, okay, there will be very heavy pressure, not just on the Dow Jones but on the entire US stock market, including the S&P 500. There will be very heavy pressure. Then only the S&P 500 will be in a condition to enter into the 7,100 range, else not. Because as long as the Dow Jones is holding, sustaining and giving closings above the 50,000 psychological mark, S&P 500 will remain bullish. Okay, it might not be able to move up to the new all-time high or to 7,500, 600, but at least it will remain bullish no matter what, because of that condition of the Dow Jones, right? So guys, if you have liked this video, then please hit like to appreciate, and your appreciation matters a lot. And if you want to get these daily precise updates, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And other than that, guys, if you have any questions that you want to ask, or if you have any suggestions that you want to share, then for that, please use the comment section of this video. So guys, this was my S&P 500 weekly technical analysis for the week of June 15th.